Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
And the SPY and the Qs are in a very interesting place. We're at a place where we're trapped between the 100 and 200 moving average, and we have a week of possible hell coming up. So let's take a look. Two Super Guys Trade Stocks.
What's that line? Jack to the tits, buddy. Okay,
Jack to the tits.
With big earnings. We got this indicator here flashing like no tomorrow, right? All right. So
what is
this is from figuring out money. This is looking at back month versus front month volatility. Basically, it's designed in theory, right? As time goes on, the possibilities become wider, right? Because like you're having like a distribution curve, if you will, right? As far as like potential outcomes. What this is showing you is that it's kind of flipped backwards right now, meaning that you're not paying enough for like the current volatility in the market. If you look at this chart here, every time it's come up to this 1.2 region, basically it's marked a market top during this whole bear market session. This is the areas he's got highlighted here. And we're above this 1.2 level right now as of close of trading on Friday. Was it April 21st or whatever. So we're in this region where we're looking at a market top and we have major earnings that represent a huge portion of the S&P 500 coming up this week. So this is a potential turning point where we could see some massive volatility, which is usually good for, bear traders, if you will.
Bear traders. Ooh. Just to throw this out, there's a last slide that has like all the companies, but it's kind of overwhelming because most of them in terms of weight don't matter. But just looking at this for Tuesday, Wednesday, Thursday, Friday, I think Coke is Monday. I'll have to double check. Google 1.81%. It's not really accurate because there's two of them. So it's really like 3.5. But you essentially have almost 15% of the SPY reporting this week and in all different sectors. It's not just tech. It's tech, oil, McDonald's is also a decent size one. I put Roku on here, not that there's a lot of weight. I just think it's not going to do well. So, just in case people are looking. Also, let's be real here. Tesla tanked. Oof. We got a separate video on this, but you can see that they have dropped below the 100 moving average as well as the 200. I'm going to show you why I think that matters. So we talked a little bit last week how we're in a channel, if you will. This gray line or gray dotted line is 100 moving average. This blue is the 200 moving average. This is the SPY. So I showed you last week how anytime we're in between this, we're kind of in, I don't want to say indifference, but we're kind of just in chop zone. We haven't really picked a direction, right? Usually when you go above it from here, you're in a bull, and when you go below it from the 200, you're in a bear market. So we're still kind of deciding what's happening, but if you coincide that with Vinny's thing, shakshay, Qs are in the exact same thing, right?
Yeah.
I don't like to draw a lot of attention to this because for every one guy who's being like the market's about to explode, there's another guy who's calling for a bull market. But this was like a hefty claim. Do you know who Jeremy Grantham is?
I've seen the name before. I feel like he's a talking head on CNBC on occasion.
Yeah, me too. I don't know anything beyond that. But he was saying that we're going to drop 52% from here. The housing market's going to drop first. The problem with that is the last housing market crash, it was peaked in 2006 and bottomed in 2012. So that's like 6 years. I don't know about that.
And 52% is an awfully precise number, which is ridiculous to me. And bank failures, I don't know, man. We've seen the FDIC and the U.S. government step up to support banks. Although this weekend, David's Bridal and Bed Bath & Beyond both filed bankruptcy. Did you see that?
I did not. Bed Bath & Beyond finally hit the, Man, what was the guy that did the trade on that? The Chewy guy.
Oh,
and everyone was mad that he left for cash. It was like
David Cohen?
Yeah. Yeah, he sold his calls, made a bunch of money, and people were mad. And it's like, what? That's the point of stocks. You're trying to make money. Didn't make any sense. The devil's advocate for the bear case is that we just found out the output for the economy actually rose at its sharpest pace in almost a year, according to the service and manufacturing PMI. So just throwing it out there. What are you buying right now? Are you buying anything? Or you're sitting in cash?
I'm still, I want to say about 20% cash. I'm not really buying much. I'm still went back to the whole covered call thing because I'm a complete and utter moron and can't stay away. But I haven't really bought anything like big or new or sexy anytime recently. So I've
Okay.
been selling puts on Oxy, so maybe I'll buy
All
some of
right.
that.
I have been buying Google, BAC, and TLT fairly heavily. I'm at 100 shares on Google, 100 shares on TLT, and I think I'm like 75 on BAC. I got too greedy. I was going to buy a bunch if it hit 23, but it didn't. Um, AMD, I still think it's overpriced, so I bought a couple of shares. And Schwab, I'm still holding. Oxy, I'm really trying to buy it under 60, preferably like 57. What's your put
Okay.
value for Oxy?
So I actually sold one at 55, and then as Oxy traded up, I rolled that one and sold one at 60. So that was my most recent like month. So I ended up selling basically puts on Oxy twice during the 1 month and collecting, I don't know, probably like $150 or so in total premium. Nothing too crazy, but you
Nice.
know, yeah, still lower my cost eventually.
Do you remember First Republic Bank?
Oh yeah, Mark Zuckerberg's bank. This was like the one that everyone had to kind of come together and inject a bunch of cash into to save it, right?
Exactly. So Silicon Valley Bank, goes away, dies. Then they shut down a signature. This was the next one for the run on banks. This was the most at risk one left. It stabilized, dropping from 130 to 15, which is rough.
Yeah.
They report on Monday. Okay. Now, I'm not saying that that means there's going to be a run on this bank, but if there is a financial issue, it's going to be Monday, right? Now, you could play the flip side of that and buy a bunch of calls, which I'm sure Wall Street Bets is doing, right?
Yeah, they were buying a ton of this stock. There's like literally several people that have gone like full YOLO into this stock or options on this stock. I'm not really sure which, but
It's just a pure gamble, right? Because if that's terrifying. It sucks as a bank can do everything right, but if everyone pulls out, it's over. So
mhm.
this is the whole list of earnings. All right. Essentially, all you need to know, this is overwhelming, is that slide that showed about 15% ish of the SPY point this week, and then Apple's next week.
Yep, it's May 4th.
Oh boy.
Yeah, yeah, definitely a couple weeks that will probably have a good shot of breaking this little trend we've been in because earnings being really important. We have major companies as far as waiting reporting this week and next week, so it makes sense we can finally maybe break out of this trend. I have bullish or bearish. At least we'll have a little clearer definition of which one we should be trading on, right?
I agree. The key here is you're looking for a break on the Qs and the SPY. They're almost in the exact same position between the channel of the 100 and the 200 SMA. So to have a good one, guys.
Catch you next time.